Welcome everybody, welcome to Scalper School from Trade the Easy Way. Very glad to see you this evening. Glad you can make it. Like I said to you, I'm going to keep this very short, very sweet. Just going to introduce you to Scalper School. Scalper School has been around for good 9-12 months now. Very successful. I'm going to show you a couple of live trades today. Nice to see you, John. Welcome. Nice to see everybody, in fact, but let's get going. So I'm going to give you an instruction. I'm going to call up I'm going to show you a live trade today. I'll show you the results of that live trade, not just the chart, the actual result, the outcome of that trade. And I'm going to go to live charts and then talk around a couple of aspects, a key aspect of Scalper School with a live chart in front of me, rather than just stick to slides. Okay, so when I say it's a unique and profitable blend, I use the word unique in that I've not seen any other coach or mentor teach this blend of tools together. All the singular elements of this, and there are 6 core elements to Scalper School to help you, to guide you to great scalps. There are 6 core elements, but I've not seen the 6 combined in this way, and I find this very, very powerful, and you'll see the results yourself from screen grabs of my account in a minute. First off, let me just say that in the industry, scalping is seen as grabbing 5 to 10 points. Scalping very, very often, rapidly throughout the day. Some people get glued to their screens and they are just trying to slice off 5 to 10 pips throughout the day. Now that, using a lot of leverage, now that can be, if you're really, really skilled and very focused and knowledgeable, then you can do that. That's not what I'm suggesting here. What I'm suggesting here is you limit the time at your screens, you grab a slice of the market, and then you just close your charts and walk away. Well, that's certainly one option you've got. So that's my definition of scalping in the context of Scalper School. Scalper School is not about rapid fire scalping and just trying to slice 5 to 10 pips every time. So just get through the disclaimer. Got to have a disclaimer. Trading involves risk. You may lose more on your deposit. Do not trade with money you cannot afford to lose. It's as simple as that. It's a completely different ball game if you have to make money, if you cannot afford to lose that. I don't think you can trade in a situation like that. You need to be trading with money you can afford to lose. Okay, let's move on. So that is a picture of me in Almaty in Kazakhstan over the summer. I've been trading for years. I've been trading for a very long time. As you can see from my high hairline, I've been around a while. I'm a pivot trader, and I keep my trading very, very simple. And I trade Forex for day trading, and I swing trade UK and US stocks. And yeah, I'm a master of the bigger picture. I love cycles. I trade cycles, even in property, not just stocks and commodities and currencies, but also property as well. And just a disclosure there, really, I'm also managing director of Santander Direct Brokers. Very efficient platform. The platform is FCA regulated in London. The platform is based in London, and it's a very user-friendly platform. So a final bit of sort of housekeeping before we move on. Founded in 2009, we do not sell systems indicators. As far as I'm concerned, if you don't understand technical analysis, if you're not able to trade your own account off of the charts, then in my view, you shouldn't be trading. Some people love systems. They make money on systems. That's fair enough. That's fine for them. That's just not what I'm about. I'm about pure technical analysis and reading the charts and using the charts to lead me in and out of these markets. So scalping is not for anybody. I'm suggesting that you've got to have a reasonable amount of experience, and the fact that I'm teaching in Scalper School a rules-based methodology, a rules-based system, a discretionary system, not a computer system, then it should safeguard you and give you a good high hit rate. Now I'm looking for a 65-70% hit rate on this, and so people who will benefit from this will be already technically skilled, wanting to trade using strict rules, and just for your benefit, keeping a journal so you can look at that and monitor that yield curve is very, very important to me. I don't think money management is taught enough in a lot of courses that are out there. I have a big emphasis on that, and it is about testing your strategy, and like anything else, if you want to get to the top, then you need to put the work in. So as I've already explained, to me scalping is not, or in Scalping School it's not about 5 to 10 pips, it's about 20 pips per session, and I'll explain in more detail as we go on, particularly on the live charts, why I find this is just a very successful way of getting in and out the charts. This is a development from Scalper School when it started. I've just shifted Scalper School and refined it to give everybody a better chance, a higher probability of getting in and out of these markets quicker and just spending less time at the screens. So we are trading, we are using leverage, we are using larger positions for small moves, and as far as I'm concerned there are 3 lovely volatile periods in the day, or more periods with greater momentum, I should say, not necessarily volatile. 3 periods in the day when you need to be at your screens, or you could be at your screens. That is the Euro Open, the US Open, and the London Close. There are a couple of other really nice periods as well, but they are the more main ones. So in UK time, 10 o'clock, 2 o'clock and 6 o'clock are great times of the day. 6 o'clock is because you've got the London Close out of the way, and the American market, as you know, it's a lot of volume in the American market, obviously, so you get other moves into the evening and sometimes overnight from looking at the 6 o'clock period. If you've joined a bit late, don't worry, this is recorded, you can zip through the intro. So moving on, the best markets for scalping, obviously you need momentum. The whole fact that you are looking for just to be in the market for a relatively short period of time. Sometimes these 20 pips can take longer. Again, I'll talk about how you can do that with very low risk. Typically the euro and the pound. I think you can build an account purely on the back of the euro and the pound. There are occasions when the Aussie dollar and the CAD are trending very, very well, but I myself make a lot of money out of the euro and the pound, and I've seen lots of other people do it as well. I've seen their journals. Sometimes periods come along where some of these other pairs are moving very well. I mean, for example, when oil was shooting up to $150, obviously the CAD, it was taking the CAD with it, so that was a lovely pair to trade as well. And the Aussie was much more volatile in the days of the run-up to the peak in gold not so long ago. ECB and Bank of Japan, they create a lot of volatility, creating tremendous opportunities in volatility and volume, I should say, and they're great ones to chart. So this is a trade I did today. You can see on the left-hand side of the screen. Let me get my pen. So this is just doing this so I can prove that this does work. This is today. So I got 8 at the time I took this screen dump was just before I was about to exit. So it's 1.1 pips just before I exited. So I got a couple of £100 out of it. It was a very short trade. This blue line is my entry. pushed it, and I just took it off into resistance. Markets move sideways for 80% of the time. So, you know, if you're an intraday trader, or even if you're a scalper, 80% of the time the market's just moving in a range. So part of what I'm doing, a big part of what I'm doing, is I'm just taking a slice of that range. Here was the range in this particular pair, moving very, very nicely. This was a Euro session move. This was a US session trade. I did put on Facebook an image of my Euro session trade, which was very similar money to this. I know, I just momentarily forgot what I did. I actually shorted the pound yen for 20 pips as well. So I'm using decent amount of leverage, and so I'm plus 40 pips minimum today. Overall today I'm a lot more than that, but I'll explain in more detail as I flick through the charts. But here you are, there's my trade. That was my risk. I was risking £70 to make 200. So that was my risk reward ratio for that particular trade. Any questions, chuck them in. That was actually the US dollar yen. Any questions, throw them in, and I will either answer them straight away, or I'll save them till 1 or 2 slides later, or of course at the end if I haven't got to them by then. This is another one of my accounts. I actually trade about 5 accounts in the end. This was 20th and 21st. So I've got 325, 101, 40, 131, and a minus 180. So I think here, where I only had £40 profit, what I was doing was I was ramping up the stop and then trying to see if I could leave it to run. On that particular occasion it didn't work. On these other occasions I'm just scalping for my sort of 15-20 pips. You know, sometimes I don't walk away with 20 pips, but more often than not I do. So I wanted to show you that account just so that you can realize that what I'm talking about is working and is providing me an income. Oh, here's another one as well. Minus 30, plus 479, etc. You can see that. I think you can read the numbers. Okay, so which brokers you trade through? That account I've just shown you was santondirect.com. Like I said, it's a very, very efficient platform. Really tight spreads, very fast fills. So I'll post you a link in the room later for that. So what are the tools? The tools are ranges. There's several ranges I look at. Stochastics. Stochastics is probably the least important out of this. Very much the least important. If for the bigger picture and to draw me towards reversals and trends, I look at MACD in the weeklies. 200 EMA or in a 5-minute chart, and throughout the other time frames as well. That's the 60-minute on a daily chart. Fibs on daily 4-hour 15 minutes. And in Scalper School we devote a lot of time to fibs in particular, because I've got a very different way of using fibs, and this is one of my key edges. Anybody in the room not using fibs, I'd be surprised if anybody in the room isn't using fibs. But to me, fibs is the real code of trading. And like I said, I use it in a different way. I've not seen this particular way used anywhere else. No, I have seen it once or twice, but not the same emphasis as I use it. Weekly and session pivots. Every week when the market's open, there is a major pivot that I look at and use as a fire line for my trading. And in Scalper School we go into a lot of detail about what that is, why it's so important, and how you can use it to anchor your trading. And timing, up until recently, Tuesday, for example, has been one of the highest volume days of the week. So when I put timing there as a tool, I'm talking about pinpointing not just the short part of a session, I'm talking about pinpointing the day of the week within the month, and the month itself. Of course, August is a terrible month to trade. You know, the volume's just not there. Most traders are away on holiday. Fund managers not committing themselves, so that's why I put the month in there, just to emphasize that as well. You might just as well pack up and make sure you go away and find yourself on a beach somewhere through August. The strategies in Scalper School, and the strategy that led me to profits today and leads me to profits every day, are data moves. I will backtrack on the Fed rate decision last week. If I can just quickly grab the chart in a few minutes, and just quickly show you a data move. Open ranges, they are key. I think there's at least one, if not more, people in the room who've done Scalper School before, and past Scalper School graduates get a massive discount on redoing it, because I want you guys to have the upgrade. But open ranges are absolutely critical to what we do. And you saw earlier on the example of today's trade, yeah, it's a fairly range bound day. I haven't looked at the markets for a couple of hours, but it seemed to me the markets were stuck in a range. They're waiting for US GDP tomorrow, really, and not very little tier 1 data this week. So tier 1 being, core price inflation, main monthly jobs, rate decisions, all these kinds of things. Not very much around this week, apart from GDP tomorrow, for my money anyway. Breakout and fades. For anybody who's not familiar with the word fade, I'm using that in terms of retracements intra-session. For example, if you've got a decent move, perhaps you're an indice trader, or perhaps you're just focusing on the pound. If the pound or the indice has broken out during that session, quite often in the US session they'll drag it back and repeat the whole exercise, repeat the same pattern. Gap fills, P is part fill versus complete fill, and again, that's an important part of Scalper School and my preparation for the day, my preparation for the week. I'm not going to go into any detail for that here. I'm just going to stick to one or two aspects of this on the live chart, and then what you need to do is, of course, join Scalper School. One of the reasons I said earlier when I talked about my profits for today, I didn't just make 2 trades and 20 pips each. What I was actually doing was, in the Euro session, I was actually hedging. I was buying the yen because I have a position, one of my swing trade positions is selling the yen. So as the yen was strong in the Euro session, I was actually making profits, I was building my account by hedging. Now I do hedging on intra-week scales as well, because if you've got a very strong trending chart, maybe an instrument, whether it's a stock or forex, moved up 2, 3, 4, 500 pips. I don't know about you, but I don't like sitting in big pullbacks where it's going 1, 2, 300 pips. So what I do is I use scalping as an extra tool in my box to still benefit from that account, still put money into my account by hedging a position. But that's more advanced. The main aspect of scalping is, the whole point of scalping is that if I'm saying to you, if you want to make money out of trading and you want to spend less time at your screens, become a scalper, get in and out of the market inside of one session, in a window in one session, and then close your platform or walk away, so that you don't have to keep staring at screens for hours on end. You don't have to be concerned about whether you're at the screen at the right time or the wrong time. You can just use the market to make your money, clear your account, close your trade off, and then get on with something else. Maybe you run a business, maybe you just look after family, maybe you just want to lie on the beach. But yeah, that's what I'm proposing you do here. All right, I'm just going to give one of the setups away. This actually happened. This is an old chart. I pulled this out of my archive, my library. This happened on Fed Day as well, where you've got. I think this is the Dow. This is the Dow on a 15-minute chart. This setup is about. I call it a data 15 trade. And it's very reliable. The thing about this setup is it's counterintuitive, because what happens is this bar here is, I'll just fill it in because I like drawing. This bar here is the first 15 minutes after an announcement. So you have a huge momentum to the upside, and then on the 15th minute, this setup says you trade it back to the breakout position. Now you've got a couple of options. You can either just take the trade off and walk away, which is what I'm suggesting here, or you can take half off and leave the rest on, because on occasions when this happens, this sometimes happens at the beginning of good trend reversal. I've been on moves like this where I'm making, I've made subsequently something 1, 2, 3,000 pips, but this setup alone gave you this is a good 100 plus pips on the day. You can see, if I just clear that a second, you can see it actually took 15 minutes to get up and 45 minutes, or just under 45 minutes, to return. So if you did nothing all day, if you just didn't even trade this, waited till the data announcement, don't even be at your screens for the data announcement, just come to your screens 5-10 minutes after the data announcement, trade it and take the position back to where it came from. Simple as that. And that's one way of really seriously limiting the time you're spending at your screens. A lot of people would have traded this all day, would have, is it going up, is it going down, oh dear, it's broken, wow. Well, this is all very, very time consuming, and this is a lot of hours at your screens. This is 45 minutes at your screen, and it's, if you're in the UK or in Europe, it's at the end of your day as well. Like I said, it's counterintuitive, but it can be very effective. If you didn't trade this, but just came back to your screens the day after, then you can see, the main thrust of the direction was down. We didn't hold that range. We didn't get back into it. We didn't hold it. So at that stage, any pullbacks were for selling. If you're an Elliott wave fan, I hope you know something of Elliott wave. You've got 1, 2, 3, 4, 5. These are bear flags. And just stick with the trend, and then you can hopefully capture the main moves. And then all of this type of trading will be covered in Scalper School. But this is a 45-minute trade, in and out. You've got more pips in 45 minutes than these guys got all day. So that's one of something like 6 different setups in Scalper School. Now, we do not trade a whole batch of setups. There is one key setup that we use every day in Scalper School. This happens to be just a pure data setup. Any questions on that? This announcement, this is a tier 1. So this would have been either jobs or rates. Now, I've not dated this. I've not put enough information on this to remind me about what I can just see top left of the screen. It says Fed Day setup. So this probably would have been a decision on rates. Okay, but this is tier 1 is rate decisions, monthly jobs, not weekly jobs, core price inflation, or I would probably class trade balance in there as well. One of the most profitable trades I ever did was before the September 1987 trade balance came out. Like a lot of people, I was heavily invested in stocks. I sold. Unfortunately, I can't prove this because it's so long ago. I tried to find the records for this and I couldn't. I sold 80% of my stock about 2 hours before the September 87 trade figures came out, and that was the trigger for Black Monday. Like I said to you in the beginning of this presentation, I'm very keen, I'm very hot on cycles, and that particular period in the life of the stock market, that particular period in the year, and that particular period in the month was a premium period to be cautious. If you are going to get a crash, September, October are very high probability trades if you get the right chart pattern. Okay, next slide. I'm not going to keep you too long here. We are getting on here. This is another example of Data 15. I've whizzed through this one because I've talked to you about the other one in detail. Notice the big move up here on the left of the screen. This is the pound yen. Huge move down. And you can see this is the 15-minute bar here. So it actually gaps down. The low of the bar is here and the close of the bar is here. So if you did this trade, you'd be getting in here. That would be your entry. The stop would be under the low of the 15-minute range, and then your exit could be, depending on your strategy, the exit could be just the bounce back to the breakdown area, or at least the gap fill. If you kept half on, or if you managed your stop, you can see you would actually get this winding up. This is a bull flag. So I'm spending a little bit too long on these slides. I'll try and pick up the pace here a bit. So why should you join up in Scalper School? Why should you join the team? Because you're a good technical trader. You want to spend less time at your screen. You want to watch me, how I implement what I teach, how I implement the rules. Perhaps you're in a swing trade. It could be an intra-week trade. It could be a longer-term trade, and you hate sitting in deep pullbacks like me, and you want to keep making money on a particular trade. So, for example, like I said, I was buying the yen to hedge one of my swing trades. Okay, so now some people do not hedge. They're not interested in hedging. They just want to make their money. They're impatient. They want to get in the market now. So their personality is suited to scalping. You may be one of those people. So you let me know if you are interested in that. I don't know. I'm going to move on. I'm going to skip that question, Trevor, because I just want to finish up early. Right, okay, I'm going to go to live trade. I'm going to go to a live chart in a minute and just do some more examples. But while I've got this slide up, what I'm suggesting here is, what I'm offering you is actually that Monday the 27th, 26th September was postponed. It's postponed till next Monday. So I'm committed to next Monday because I've got people booked in already. But these are clear setups, clear chart preparation, and they are a daily routine. There are 3 live trading sessions in this. There's a 20-minute one-to-one mentorship after the course, straight after the course, or any time after the course, if you want to take that up. Now, it's £450. Now here I've said I'm offering you 1 month's membership for 147. I will extend that to 2 months if you book today. Okay, that's the last time. I'm never going to offer this again. If you want to join up today for £450, you will get 2 months of membership in that Scalper School package. Okay, so I'll come back to that in a minute. Let's go back. Let's go to some live trades now. Let's kill this for a minute. All right, okay. This is the US dollar yen. This happens to be my swing trade, and that happens to be the couple £100 I knocked out of the markets earlier on today in just what was it, I think a 15-30 minute period. I can't remember now. So let's go to but what I did today was I just simply took, there's no real sort of there's no rocket science to this. This is not my traditional pure Scalper School way of trading. This was just a pure one of the setups is simply just trading stochastics. I mentioned earlier on, one thing you could do with this is just simply if you've got something that has been running up, just buy dips in stochastic. If you just want to, some of them work, some of them don't, most of them do. Let's just look at the lows in stochastic. That worked. This low in stochastic worked. Let's find they all pretty much work. That's not what I'm doing. If I was trading this way, I wouldn't trade such high leverage. What I'm doing is really cranking up my position and going 10-20 pounds a point, looking for a good few £100 within 15, 30, 45 minutes. You don't have to trade that kind of leverage, but that's something you could do. So the setup this afternoon in the US session, traded after the data. It was Yellen was speaking, the Fed was speaking at 3 o'clock. Bought this dip, took it off for 20 pips. You saw the slide at 18.5 pips. I added to my account here very nicely. I've been in this swing trade for 2 days now. I've not got that many pips under the belt, if I'm honest. I've only got about 60 pips on my swing trade account, but so I added another 20 on my day trade account. Right, let me see if I can quickly go back to last week's Fed day, and then I'll show you the all markets are coming up pretty nicely. Let me show you the the data move that I talked about. What day was it? Must have been I'm sure there's not enough data on this. Okay, I'm not going to show it to you because it's going to take me too long just to come and grab it. But again, let's look at that simple stochastic strategy. You know, this is, you don't need to pay £450 for a stochastic strategy, do you? There's the dip. The markets keep coming up, keep popping up. So if you keep buying the dips, you will make it. But keep buying these dips, and you've got to beat your screens for several periods in the day. This is over that's over a 4-hour period actually. I'm not interested in that. I want to get in, I want to get out, get my 20 pips and run. You can see why I'm interested in 20 pips because, for example, this move here, that happens over a 15-20 minute period. Then if to stay in this or to get this leg up here, if you're in the Europe, you've got to stay at your charts for another hour or so here. I want to be in and out. I want to make money and get in and out. So the Scalper School system is about really picking a spot, picking a pivot, getting in and running. Any questions at this stage? But what's different about Scalper School is how we pinpoint the pivot entry. Like I said a bit early on in the presentation, there are 6 core elements to the preparation work we do in Scalper School. We're not just saying, oh, that's low stochastic, because some of these low stochastics don't work. If you haven't got enough of the core Scalper School elements together in your favour, stacked in your favour, then going high leverage could be very, very expensive. But the reason why I'm consistently profitable is because I use these elements every day of the week, and these are at my core of my trading, and they help me stay the right side of the trade. Stop sizes, that's a good question. Money management, that's what I like. What I will do, because I use a lot of leverage, if I'm in the early part of the trade, I will put a tight stop. And I think, let's look at this trade here. This is at the point in which you could scalp this one on a setup, not just on a stochastic. I would go in on this trade on something like let's probably start off with a 15-20 pip stop, but after about 5 or 10 minutes I would start to crank it up a little bit. But I'm not so much, once I'm in the trade, I'm not concerned with putting the stop up on all trades. I'm just concerned that all the parameters are there and that the market is doing what I expect it to do. But typically I would go in with a sort of 15 pip stop. Sometimes they can be on a good forex scalp. You can go in on a sort of 10 to 12 pip stop quite easily in quite a few of these trades. And if you get a good pop, you can start to get to break even. You don't want to get to break even too quickly, otherwise you'll just frustrate yourself and get stopped out too quickly. But yeah, tight stops are, it's so much more relaxing if you can get into a break-even situation pretty quick. And for example, on that US dollar yen trade that I was doing today, I didn't have a lot of money on the table for the size account I trade, but I did get the stop up close to break even after about 10 to 12 minutes, but I wasn't in the trade that long anyway. And if you look at I'm not trying to pick tops and bottoms intraday. I'm just trying to play by my rules, and so I simply just, there's enough information here for me to warrant £10 a point, enough information for me to take that spike up, get out of the trade, and then just do nothing else since. I'm in a swing trade on this one anyway, but that's quite a nice setup. So let me just go, the slide I talked about when I talked about the setups takes into account different types of data. So on a week like this week where you haven't got a lot of tier 1 data, and the moves, the volatility is not as dramatic as tier 1, i.e. monthly jobs and rates. So I have different parameters for those types of data moves. If it's greater than 70 points, then I look to do a data 15 setups. If it's less than 70 points, then I operate a different setup. But the point is that, you know, at my screens, at the peak times of the day, I'm data mapping. I'm completely aware of what data is coming out in any one period of the week, and I know what are the better charts, and I'm there ready to grab my slice of the action. What other questions have you got? What else do you want to know? So stops and money management is key. Timing, I've talked about a lot. Any other questions? Okay, well, I promise this is going to be a short presentation, so let me just bring that up for now. So this is what I'm offering you. This is what's on the table. This is how you can trade less and make more, but consistently. That's the key to this. And you know, you can use a stochastic system day in, day out, but what I'm looking at here is a much more rules-based method. And also, on a day where there is a big breakout, I'll show you how to get 2 or 3 slices of the same cherry using a lot of leverage, again, but without sitting at your screens and watching it. Okay, if there's no more questions, then I'm going to close up for the session. All I would say is, if you want any more information out of this, then get hold of me. You can email me. There is a message box on my who are my trading mentors. I had some top traders in the US. God, you're going to ask me who they are now. I did work with a UK scalper called Alan Rich. Fascinating guy. He taught me how to use the market makers direct market access. I've done work with a couple of US guys, the names of which escape me because I'm going back a few more years. God, nobody's asked me that for a long time. You stumped me there. Okay, with no more questions coming in, watch out for other events coming up. There's going to be events every week, or at least once a week from now on. I've got an introduction to trading tomorrow night. Obviously that doesn't apply to you guys, but there will be a range of specific events coming up, some of which are for members only, some of which are free. So stay tuned with that, and if there's no more questions, I will sign off. Thanks very much for joining me, guys. Before I finish up, let me just guide you to the website. This gives you a bit more breakdown as to what's on day 1 and day 2. This is the registration for it. Now these have got the correct dates on it, 3rd, 4th and 5th of October, and of course you get access to the room. Right, thanks very much, and I hope to see you again soon.